What is up, guys? Welcome back to another episode of Lucid Daily. And today we have a couple of things that I think are really important that we need to talk about. Some of them pertaining to Lucid directly, and some things that revolve around Lucid that I think we should all very heavily consider, and things that we should be aware of for the rest of the year and potentially the first couple of quarters of 2023. So, as you guys all know, this market is extremely volatile. Like we were up 11% yesterday. Lucid was up 11% yesterday, and they were down 4% today. That has happened multiple times where Lucid has a huge run. They come crashing. Very common in a bear market to see a lot of up and downs intra-week, especially. So let's go ahead and take a look about with what happened today, and we'll talk about it. So, like I said, Lucid was down 4.5% today. They were down another 15th of a percent in the after hours. They are now trading for $18.39 a share. You see this huge run up yesterday, up 14% from the bottom of Wednesday, and then you see them come crashing back down, which is just very typical of a bear market. Over the last month, they are down 5.9%, and over the last 6 months, they are down 64%. So we have seen a substantial decline in Lucid. I've covered the reasons why and exactly my expectations going forward. Now, we talked a lot about things within Lucid that I like to see get better. And I think that we've hit on those things. And yesterday, to me, I seemed really optimistic because I think Lucid is actually internally starting to go the right direction. We're starting to improve with Lucid's end. However, the things that are not improving are is the bubble outside of Lucid. And we're going to talk about those things right here. So as you can see, there's a couple of things that I want to talk about that I think are extremely important that I don't know very many people that are all into Lucid. I'm definitely not all into all Lucid. It's actually one of the smaller positions I have, just to be transparent. However, I do think that these things that I'm about to discuss are extremely important for every single investor in the market to understand what is going on. And I do very thorough research every morning for multiple hours. It is part of my job. Obviously, I'm not a financial advisor or anything like that, but from everything that I have read and things that I've learned about, these are the main things that are really hurting the economy and the stock market right now, and why I think that this is actually going to be more difficult and more of a thing that people are going to have to understand in the next 2.5 quarters, potentially even. So we're in Q2, so Q3, Q4, it may even affect Q1. So let's go into dive into what I'm talking about. We need to this is kind of like beating a dead horse, I know, but the Federal Reserve needs to get a handle on inflation. They're raising interest rates at 50 basis points, and people think that's not enough. Some Jim Cramer this morning was 100 basis points. We need to get this thing going. And I agree with him on the fact that we need to see the Fed, the markets will change when the Fed U-turns, meaning when we see that the Federal Reserve actually say, hey, we got inflation going down now. We see a slight tick down, but we need to see inflation go down. I read Walmart's earnings reports, and people are spending way too much on items and getting far less for their dollar, which we understand, that's a consequence of inflation. I even asked my mom, Mom, how are you, because she shops at both Walmart and Target. I'm like, Mom, how are you experiencing your grocery shopping? How has that changed? And she messaged me back, and she was like, well, the biggest difference that I see is I'm not buying as far in advance for things. So instead of buying 2 cans of beans, I only get 1 because everything's just gotten so expensive. I kind of shop week by week. So I thought that was really interesting. And I think that the more we learn about the consumer, the more information that you're going to have about exactly when the market starts to change. When groceries start coming down in price, that'll probably be a good indicator. So pay attention to things like that. These companies revolve around the consumer. And that's what I'm learning is we can learn so much more by studying the consumer. So the inflation doesn't necessarily hurt Lucid. What it really does is it makes the cost of the parts go up, which in turn Lucid is actually passing down to the consumer because on June 1st, they're raising their prices. So knowing that, it doesn't necessarily affect Lucid too much right now until their demand goes down. As soon as demand starts going down for Lucid, that's when it'll start to eat into their bottom line. So we need the Fed to actually be confident and not say soft-ish landing. When Jerome Powell was speaking either last week or 2 weeks ago, I can't remember, he said soft or soft-ish landing. We need some confidence in the Federal Reserve. So, and this next point I think is even more important is the public perception. I think we're in a recession right now, Q1, Q2. It may last Q3, Q4. I have no idea. But what's really going to hurt is when we are officially in a quote unquote recession and we have every single news anchor and every single mom, every single family that knows we're in a recession, the last couple quarters, because we're not going to know for Q3 in a while. But once we find out if we're in a recession in Q2, that's when it'll all be a headline like recession. We are in a recession. We are in a recession. What does that do? It scares the consumer, it makes the consumer spend less. So as soon as the consumer is scared to spend, everything goes to crap. So that I think will affect Q3 more than people are understanding right now. Next, with China. With China, we have something really interesting. Shanghai is still shut down, and I was reading this morning that as of right now, they're planning as June 1st to start easing into opening up the country again, into the city at least. And until we see lockdowns lifted, we are going to see incredible strains on supply chains, like more than we already have. And that's something that these companies did not account for in their full year guidance. I think companies are going to miss their full year guidance, and we're not going to see those misses until Q1 of 2023, which is really going to suck. So this, I hate to be negative, but I'm learning too much not to pass on to you guys. Not that my knowledge should be taken as like financial advice, but I think that the more we learn, the more we can make decisions based off of our investments. So until we see lockdowns lifted, supply chains are not going to get any better, especially coming out of China, and especially with the food scarcity that is going on right now. It's pretty insane, and we do know that the economy is not necessarily a priority to China. The zero COVID tolerance is what's more important right now. So until that gets resolved, we're not going to see an economic shift in China for a little while, which is kind of scary. The other thing was when the supply chains start opening, this is kind of just an idea that I've had floating around, is that the companies with larger orders are going to get priorities. So if you look at Lucid's point of view, if you have the same part, if you're China and you have the same part coming from Tesla and Lucid, and you can only have one of those part, like you can only send it to one of them, those people are probably going to pick Tesla because Tesla, they know, is going to be a robust company that they have hundreds of thousands, millions of orders, whereas Lucid has tens of thousands and will get to hundreds of thousands of orders eventually. But if you're China and you're like, who do I want to build a better relationship with? Tesla that has millions of vehicles or Lucid that has tens of thousands? So that's what I'm a little afraid of, is that these smaller cap companies are going to get hurt more by supply chains. I can't even imagine like mom and pop shops, how they're affected. The next thing is Russia and Ukraine. I read thoroughly Walmart's and Target's earnings calls, and they are spending more on gas and diesel for shipping costs than they could have imagined. Like they budgeted in an extra $1 billion for the rest of the year to be able to ship their products around. And until we see that war be resolved in Russia and Ukraine, oil will continue to be high, which will make the costs of goods sold even higher. So these companies that don't necessarily have pricing power, like Walmart necessarily, they're going to have to they have to absorb these costs, and that's going to affect these companies' bottom lines. So those are the three things we need to start to see a change. And until we see a change in those things, the market's going to hurt. And inflation, then the soonest we can see it is probably Q3, probably in Q3. The best case scenario is the next CPI report that comes out. We see a negative CPI, I think it'll be negative, which will mean we'll be in a recession. Like the GDP will be negative, which means we're in a recession. But the next time we hear from the Federal Reserve, we need to hear them say, yes, the numbers are going to, we are seeing what we want to see. We are going, this is how we're going to land, not a soft or softish landing. And the next thing with China, if we miss June 1st, that's going to suck. These companies need China open because China controls, I can't remember the exact percentage, but they control one of the largest, I don't have it in my notes, but they control one of the largest percentage of shipping and of supply related. I'm trying to find the word. The supply related trade routes, and we need to start to see things get better in China. And then with Russia and Ukraine, obviously what's going on over there is terrible, and we want the most peaceful resolution possible. And until we get that, then oil is going to continue to skyrocket, and the cost of goods sold to these companies is going to be a lot higher. And these companies have not budgeted. You can't budget in a war. But with all these three things coupled, it's slightly terrifying to be an investor. So my strat, the number one thing that I would say to my friends and family is, I've seen a lot of people say very ugly things with how they feel about their portfolios and how it makes them feel about themselves, is do not invest money that you do not overinvest. I think that's something that we need to be very wary about, is protecting ourselves first and not over investing in the market. I am all in the market right now. Like I run very low. Like I put most of what I am in the money just because I have very little financial responsibility in terms of like I pay rent. I take care of myself, but I'm not married. I don't have kids. I don't have things like that. So I would say make sure that everything is in order before investing. So I know that these don't directly affect Lucid, but it affects the market that does affect Lucid. And especially with what I talked about, the supply chains and the priorities, that's going to be something interesting that we see develop. So those are my thoughts. I'd love to hear what you guys think down in the comments. I'm with you guys. So I'm in the market. I feel the pain. I understand. And if you have any questions, let's talk in the comments. And like always, thank you for watching. We'll see you next time.